There's a concerning trend emerging where people are relying too much on the monthly price data from one high-profile source as an accurate indication of what's happening in property markets and what will happen in property markets. Too many people take this short-term price data as the gospel truth and allow it to dictate their decisions on whether they will buy real estate and where they will buy it. Australian consumers need to understand this simple truth. All real estate data, to some extent at least, is dodgy data. They're all rubbery figures and you cannot take them too literally. You certainly should not make big assumptions or big decisions based on 1 month's figures from one source. And you need to be aware that the emphasis featured in news media is often quite different from what the actual figures show. And in addition to all that, quite often I find that the day-to-day evidence at the coalface of property markets suggests that individual markets are working differently to what's portrayed in the published data or media's perception of the published data. A key lesson to take on board is that you cannot look at Australian property as just one market. There is no such thing as the Australian property market. There are literally thousands of different markets, all driven primarily by local affairs. Now, CoreLogic puts out its monthly data on prices with a single figure for Australia, and people make the broad assumption that this is true for the entire nation. Consumers absorb erroneous messages about prices being in decline or messages that the rate of price growth is dropping pretty much everywhere, and it's simply not the case. I repeat, all real estate statistics are rubbery figures to a certain extent. They generally don't take into account local factors, which have a much bigger impact on price trends than nationwide elements such as the level of interest rates. Meanwhile, price data from other reputable sources have different numbers which often tell a different story. A recent example was a report from CoreLogic which claimed that Melbourne house prices and Sydney house prices had fallen slightly in the month of March. But when you look at another reputable research company, SQM Research, its analysis of the same period shows that house prices actually increased in both the big cities. If you source the latest data on median prices and annual growth for a particular city from 4 different sources such as Domain, SQM, CoreLogic and the Bureau of Statistics, you're likely to get 4 different results. 4 different median prices and conflicting information on whether prices are rising or falling and by how much. Now, I recently did an internet search asking for the median house price for the suburb of Blacktown in Sydney's west. I got an answer from 7 different research sources, and there were 7 different answers ranging from $745,000 to $900,000, and that's quite a big range in median prices. And this begs the question, who's right? Maybe they're all wrong. In addition to that, quite often the price data that many are publishing does not correlate with what is happening at the coalface. An example is Perth. People who are trying to buy there will tell you that properties are selling quickly, it's hugely competitive, and prices are rising fast. Individual suburbs have increased by more than 20% in their pricing in the past year. But CoreLogic data certainly doesn't reflect that. It says that the median house price for Perth rose only 7% in the past 12 months, but professionals at the coalface of the Perth market, valuers, buyers agents, selling agents, as well as individual investors I've spoken to, say that this is not even close to being accurate. So I don't think the CoreLogic data on the Perth market is very reliable. And SQM Research says that the annual growth figure for Perth is 11%, considerably higher than CoreLogic's figure, but even that number understates the strength of the Perth market. Now, the figures that many data companies come up with for the same market are quite different because they have different parameters and different methodologies, but they're all reported as fact by the media, which never highlights the differences. And it shows that you can't rely on just one data source to truly reflect or understand what's happening in a given market. But the biggest message of all is that the monthly price data published regularly by the media is largely irrelevant to the decisions of consumers because these historical price growth figures do not inform the future. Real estate consumers need to take notice of forward-looking indicators such as sales volumes, vacancy rates, rental data, and information about infrastructure spending. The one data set I have the most confidence in is sales volumes. As the advertising slogan says, past price growth is not an indicator of future performance, but sales volumes trends are a good indication of future performance on prices. A consistent rise in transaction levels is generally a precursor of future price increases. It shows that demand is increasing, and as demand rises, so do prices. And here are some other factors that do inform the future and which point to strong growth in selected markets in 2022 and beyond. These factors include the continuing exodus to affordable lifestyle trend to regional markets and the smaller capital cities, the prospect of the Commonwealth Games in regional Victoria, the 2032 Olympic Games in Brisbane and Queensland, the level of infrastructure spending in individual regions, and the huge upcoming impact of the reopening of international borders, which brings back overseas migrants and international students. These are all things which are having an impact on local property markets or will have an impact in the near future. But none of this is factored into the so-called analysis you will read or hear in mainstream media. All of these things are more important for people to contemplate rather than the historical and dodgy data about changes in capital city house prices in the recent past. There will be high levels of price growth in Australian property markets in 2022, not everywhere, but in selected markets. And the challenge for investors is to identify which markets are the growth markets.